So investor is a different loan occupancy type, and it has different requirements that are more stringent than for primary residence or for second home. So if the intent of the home buyer is to rent out the property 365 days a year going forward, however long it is, their intent is to rent out the property, or if they need the rental income to qualify, then they would have to buy it as an investor. And investors require a minimum of 20% down for condos, 15% down for single family homes. But the interest rates for investment purchases are quite a bit higher than they are for second homes and for primary residences.
For today, for example, as of today, if I buy primary, it would be like...
Let's say 3.75 for primary, 3.75 for second home. Now, if you're buying as an investor with 25% down, it'd be like 4.125, 4.25. So it's not that much higher than your principal residence or your second home. But if you put 20% down, then it goes from 4.125 or 4.25 all the way up to 4.75, 4.875. It's a huge difference. And if you put 15% down, then you're looking at 5%, plus you're going to have mortgage insurance with less than 20% down. So the cost becomes really prohibitive in your cash flow, because one of the things that you want to take into consideration when you're buying an investment property is how much the rent is going to be as compared to your monthly payment. Like you mentioned when we spoke earlier, you have to put down 35% in Hawaii right now to be able to generate enough rental income to break even on your housing payment. So if you're putting 20% or you're putting 15% down, you're going to have a much higher housing payment and you're going to be in the hole several $100s a month. But for qualification purposes, that's somebody's decision. If they want to be in the hole a couple $100 a month on an investment property, that's their choice. Or if they want to put enough down to break even, that's their call. But to qualify for it for the mortgage, what we use as a lender is 75% of the rental income as determined by the appraiser to offset that mortgage payment. So let's say they were buying a property here in Hawaii and they're putting enough down so that the total monthly payment was $2,000 a month. The rental income for that property is also $2,000. We're going to use 75% of that $2,000 to offset the $2,000 payment. So we're going to use $1,500 to offset the $2,000 payment, which means the client only has to qualify for a $500 payment. So if you have the same client with the $10,000 a month income, $2,000 a month current housing expense plus $500 for their current credit cards and auto loans, they can qualify for up to $2,500 a month for an investment property, and we're only going to hit them for $500 a month because we're using the rental income here in Hawaii to offset that payment, 75% of it anyway. Now, they have to have an existing housing payment to be able to use any rental income to offset that mortgage payment.
What does it mean?
That means they can't be living at home with mom and dad for free and then buy a property in Hawaii and expect to use the rental income to offset.
Really?
That's right. They would have to qualify for the entire housing payment unless they have a 2-year history on their tax returns of generating rental income from some other property that they own.
From some other projects.
So they can either be renting or they can currently own, but they have to have an existing housing payment in order to use the rental income to offset. That's actually a new rule that just came out.
Just came out.
Yeah.
And this rule about 6 months, the total reserve. So that's kind of steep if we're talking about expensive properties.
That's been around for a while. But most people that are buying investment properties have some IRA or 401k which can take care of the reserve requirements.
For the reserve.
You don't have to dip into your 401k or IRA. You're just using it there in case. That's what reserves are. They're just in case you have a hardship, you can tap into it.
So would that be allowed to use IRA to buy investment property? I'm just curious.
There are IRAs, self-directed IRAs that you can use to buy investment properties inside of your IRA, but that's a totally different program. You will not use a conventional mortgage lender for that program.
I see. Interesting. Thank you. Helpful.